Welcome to today's webinar. My name is Lunta Di La Paulo. I'm the founder and managing director of Yetu Accounting and Tax PLLC. We are a CPA firm based in Chicago, Hyde Park, and we serve business owners across the nation, across the United States, and now we even serve some businesses internationally. We're not only a traditional CPA firm servicing business owners for their accounting or tax needs. We also have an advisory practice where we help business owners today around exit planning. We help business owners prepare their company for a foreseeable exit, whether it's a transfer inside their family or if they want to sell the company. We help business owners around these solutions. And today we have a very important topic, a very important subject, and we're gonna be talking on the subject of exit mistakes that when left unintended, can cost business owners significant portion of their net worth, of their wealth, and expose their families to significant risks. So if you haven't done yet, please invite friends who are business owners, share on your Facebook, LinkedIn, or YouTube pages. We would like to encourage you to share this information because what we're going to be covering today, what we will be sharing with you is if some are very important information that are designed to help you avoid mistakes that we often see many business owners making and ended up costing them dearly. And to do that, I'm gonna go ahead and share my screen so that we can begin our presentation. Okay, we're gonna be going ahead and sharing our screen. Okay, so we have here our presentation again. Um, for those of you who don't know me, my name is Lunta Di La Paulo. I'm a CPA. Um, and just to give us a rough journey for today's presentation, we're going to be looking at what we're learning from business owners and the market as professionals, as CPAs, and more importantly, as M&A advisors. What the market is teaching us, what we're seeing with clients we have served in the past, and what the data from the marketplace seems to indicate around small business owners transfer, succession, exit, and sell. We're also going to be talking on the subject of seven costly mistakes that we are seeing destroying business owners' value. And by the way, I have written this ebook. You can request a free copy of this ebook, Seven Exit Mistakes. And this is going to be the base for most of our conversation today. And then we're going to wrap up with three critical steps you need to begin taking right away to maximize the value of your firm and eventually have a successful sale. But I'm gonna be very short there so that we can pick that up in our next live next week, where we also will be talking about how do you attract serious buyer, not people who are just looking to see what's out there in the marketplace, and what you can do to maximize the value of your business. Okay, so with no further ado, here's what some of the learning experience we've been having from business owners and in particular from the marketplace, right? What we know today, and I believe you will agree with us, is that exiting your business is 100% guaranteed. Whether we like it or not, whether we want it or not, whether we want it today or not. But we know it's 100% guaranteed. It's 100% unavoidable. It's 100% inevitable that all of us business owners at some point throughout our life in our business ownership journey, we're going to have to step down and pass the torch to the next generation of business leaders. I am still relatively young, right? But I know even if it's not for age related reason or retirement reason, I may get sick and that sickness may force me to retire. Sometimes folks like me who are still young live under the illusion that life is going to be perfect for the next 20, 30, 40 years. And we ignore the reality that life happens and things that we didn't plan for may take place and disrupt our plan. So we know for sure that at some point, whether we want it or not, whether we like it or not, we're going to have to exit from our businesses. So at least we know that's a guarantee. And sadly, most business owners actually do not understand that today in the US, only one out of 12 businesses ever gets sold. Only one, only one, my friends, out of 12 businesses ever gets sold in our economy. And this number is just gonna get worse. And in a very few minutes here, I'll tell you why that number is gonna get worse. We also know from research that the majority of most business owners' net worth is tied up in their businesses. Okay, most small businesses have at least 80% of their wealth tied up in their business outside of their personal residence. So, what we're dealing with here are very serious matter, right? The inability to sell your business or to successfully transfer it to the next generation of leader can have a drastic impact and negative impact into somebody's wealth. So we need to make sure that we are taking every possible steps to ensure that that's not gonna happen against us. And we also know for business owner would tell us that I'm gonna pass the company to my sons or daughter to continue running it. We know today that only 45% or less of family businesses ever successfully transfer from the father to the sons or children. And to the third generation, the statistics are less than 15%. I'm going to repeat this because it's important that you remember this. There is an increased risk when you transfer your business from you to your children. The odds of them succeeding is very slim. The odds of them having a successful transfer of the business from you to them is less than 45%. And the odds of them transfer to your grandchildren, it's below 15%. So we need to take these statistics really seriously because a lot of people are banking on the fact that they can transfer their business to the next generation. Not only that, but we also are seeing another layers of statistics. We know in the US alone, over $68 trillion in wealth is tied up in small businesses and will be transferred in the next 20 to 25 years. Okay. So I actually like to say that not that it will be transferred, but it has the potential of being transferred to the next generation. And the reason that I say that it has the potential to be transferred is exactly because we know succession planning not always happen the way it should have happened. Most businesses die, close, do not get sold when the founder dies or is no longer available to continue running that business. So it's very important that all of us are paying attention to what's happening today. Whether you are a politician or not, whether you're a business owner or not, whether you are an employee in a small business or not, you need to be paying attention because when a business dies, an entire ecosystem gets affected. Employees lose jobs, service provider lose clients, community lose a source of potential income. The family of the owner lose a major source of their income. So we all have to be concerned about the fact that if we don't manage to execute this transfer of business ownership to the next generation, we are poised to some major social, economical disruption in the foreseeable future. So this is not the conversation of a CPA who wants to get attention. Absolutely not. Definitely, we have many other stories out there that are trying to get our attention and distracting us from the major issues we have to deal with. And sadly, I have to say this, succession planning hasn't received the level of attention that it should have been receiving, especially around the business community, the political community, and very few people are thinking about what's going to happen in the US in the next 20, 30 years. And this is not, by the way, this is not only a US problem. This is a worldwide problem because we know that across the globe, around the globe, okay, this is effectively the same problem that every other country is facing because we have the generation of baby boomer who is effectively ready to pass the torch. Okay, whether it's South Africa, whether it's China, Japan, we have an aging population, whether it's Europe or across the African continent or South America. Okay, we know that there is an aging population that have built businesses and they are ready to transfer this wealth. They are ready to transfer these businesses. But the transfer is not guaranteed because of a part of but because of some statistics that we are discussing today. So it's very important, but again, I repeat, it's very important that we are paying attention to these statistics. The second the other lesson we're learning from the market, this comes in particular from PwC Global Family Business Survey, that over 70% of family businesses have no succession planning in place. Okay, meaning they don't even have any clue whether or not they're going to be selling their business or if they will be transferring the company inside the family. And there is no clear plan in place to keep that business ongoing, alive after the founder. So, what should we expect from word small businesses? A lot of uncertainties, my friend. The other information we know today that comes from Exit Planning Institute, that only 20% or less of businesses actually succeed transferring to the next management. Okay, transfer to the next management. Okay, one in five. And we also know today that business buyers are getting incredibly better at the art of buying businesses. They are coming better equipped with professional advisors. They're coming better equipped with investors with significant experience buying and selling businesses. And many business sellers are not using the right professionals to prepare to go through the transaction process, and therefore it's a losing battle, right? It's like Barcelona playing against a very small soccer league in the US, right? We know who's gonna win, and that's how many business owners are entering into M&A transactions. Other lessons, and I don't want to exhaust all of the lessons here, but the other lessons we know is that the supply of businesses in the market for sale is increasing and will continue to increase. We also know that investors are often seen as rational people. They want to buy asset that will yield the best or the most optimal return given the level of risk. Meaning that selling your business is one type of asset class that somebody can choose or not choose to pursue versus other assets in the market like real estate, mutual funds, or stock market, bond market, derivative markets, and so forth. So it's very important that you, as a business owner, really understand that selling a business, you're competing with other potential assets in the market that can also be available for purchase. We also know today that more people are trying to start their own businesses than actually go out there finding businesses to buy. So with all these information that we know, right, we know that the cards are largely stacked against business seller. business owners who are thinking about selling in the foreseeable future. And sadly, I have to say sadly, because many business owners tell us stories like, I'm not gonna sell my company unless somebody gives me X amount of money. And that's often coming from the conversation they overheard somebody in the country club or golf court telling them that my business sold at X multiple or X million of money, and they think that's a good proxy. We're also hearing it, some business owners saying things like, I'll figure this out when the time arrives. When I feel like I want to sell this company, I'm certainly going to be able to sell it. Selling a business is not like selling a piece of property or going to a store and buying produce. No, selling a business is a lot more complex than that. Some business owners even tell us, I can do this alone. You know, even if you have sold several businesses, it's always a good practice to have professionals around you to advise you in the areas that you're not capable to address. Or my CPA is going to be able to help me. I'm a CPA, and I can tell you the vast majority of CPAs are clueless about M&A transactions. Okay? The only thing that makes us different is because we actually have managed to build a practice around succession planning, exit planning, advising business owners around that. And that's coming from our investment banking experience in another time. So this is not a simple thing. It's a complex transaction. It's heavily demanding. So don't try to do it on your own. We're also hearing other people selling things like, I'm not interested in selling, or I'll never sell. My friend, you're right. I don't disagree. You have control over this right now. You don't have to sell. But that doesn't mean you shouldn't prepare your company for any possible foreseeable event. What happens to your business if you become sick and you no longer can actually run the company? What's going to happen if you didn't plan for sale? If you're counting on your children to run the business and suddenly they decide to move to a different state and pursue other interests, you're not planning to sell, you're not interested to sell. Great. I encourage you to keep that mindset. However, plan for every eventuality, plan for every possible outcome or situation or scenario that may arise. Okay. And that's being a good business owner. Okay. For those of you who say, I'll sell to my employees, how many times we've received calls from business owners who tell us, hey, I was hoping that my employee will take over, will buy out, but they decided to retire. They decided to move to a different state where their kids are closer. Okay. My 20-year employee just left, and I was hoping to sell the company to them. Right. So we cannot live in a daydream land. We have to be pragmatic. We have to be realistic. We have to have our feet on the ground and actually have plans around that. And the same thing applies to your children. So really, if we look at this as a chess game, right? We know that your king is surrounded by many forces that at any time can corner the king, okay? And therefore, you lose the game. And many business owners are actually in a game that they're already losing, but they will be losing even big when the time for the sell comes, or unfortunately, as we age, the body becomes weaker and eventually they no longer can run the business. So don't be as one of these. And I've placed this, you know, meme there, just for illustration. Okay. And this is not, by the way, to make fun of the Ukrainians. Ukrainians are fighting a really incredible war, and they need all the resources they need to defend themselves. But right now we have an administration that thinks otherwise. That's a different conversation. But this is really a good illustration around what is happening with business owners today. They're trying to exit. They know at some point they will exit, but guess what? The market is saying you don't have the cards. You don't have the cards. Why? Because you are making one of the seven costly mistakes that is destroying value in your business, that will cost you the sale of your business. And by making just one of these mistakes, you can literally lose millions of dollars. So let's see what are those seven mistakes. Mistake number one, lack of preparation. Lack of preparation is, if not the biggest capital sin that a business owner can commit. Okay? There is this famous quote that says, failing to plan is planning to fail. And this is exactly where a lot of business owners are. They are failing to plan. And by default, they're planning to fail in regards to their exit plan. And what are we seeing as a response or as a result of the lack of preparation? And sometimes it's the business that is not ready for sale, or the owner is not ready for sale, or even both, right? We see business owners being subject to terms on the exit that are not favorable to them. We see business owners selling the company half of the price of what they should have, or the business has potential to yield in the market. And by the way, I'm not saying that your business is less valuable or more valuable, but I'm saying the value of the business is determined by the market. Whatever people in the market, buyers in the market are willing to pay for, that's the value of your business. And anything else is fantasy, right? We had a business owner about 2 years ago, and they wanted to sell their business. They thought, well, my friend got 25 million when they sold their business. My business may be selling, I have better revenue. I probably should be commanding 30 million. And guess what? Their profit was significantly low, right? A 100 million business, but their profit margin was below 2%. Guess what? Nobody's paying you for the revenue. Nobody's paying you for the top line. People pay you for the cash flow of the business, for the profitability of the business. Very often, those are the metrics that people are interested to pay for a given business. Most of the offers came between $6 to $12 million, $6 to $12 million, with significant adjustments. Okay. So the market will determine what's the price of the business and not you. And what we do as professionals is we run your valuation analysis based on what a reasonable and a serious buyer would be willing to pay for your business. Okay? We don't try to make you happy by manipulating the number. We give you what we believe the marketplace will be willing to pay you. We give you a range of value. We also see business owner, because of the lack of planning, they end up exiting at under timeline that they did not want to exit. And we also see many business owners living a deeply dissatisfied life after they exit their companies. Why? They did not prepare for their exit. So, my friends, pay attention to this. The second mistake we often see is inadequate financial records. Businesses with no financial statement, no supporting document for their financial reports, inconsistent information. The sales report says one thing, and another marketing report says another thing, or the P&L says the other thing. Lack of segregation of duties, lack of business owners who still commingle personal asset with business asset. There is no clear distinction between what the company owns and what they personally own. A lot of problems around that. So, as a business owner, you really have to be a lot more pragmatic and start addressing quality of your financial records. Mistake number three is about emotional attachment. And of course, you absolutely are right into being attached to your company. It's your baby. You built it. A lot of us spend more time with our businesses than with friends, family. So, absolutely, you're right? You have to feel emotionally attached to the business. But when a business owner forgets the end goal, what we're trying to get into, an exit, succession planning, a sale, a transfer to the next generation, and gets attached to the fact that this is my baby, this is my baby, I'm not gonna let it go, then we begin seeing suboptimal decisions being made. That's why, again, it's imperative, it's important to have people you trust along the journey that will be able to guide you, reason with you, even at some point fight you to help you get to your goals. Often, emotional attachment leads to overpricing the business. As a result, there are few offers coming in when it comes time to sell. Emotional attachment also keeps the owner unable to get the company listed when it should be listed. They wait too long, the market situation reality change, industry start declining, and suddenly the business owner comes on a sell. Too late, my friend. Too late. Too late. So you really need to make sure that as a business owner you are proactive. You're not letting your emotion to guide your decision making process. Although emotions are a really key part of making quality decisions, but you shouldn't let your emotion drive your decision making 100%, and as a result business risk increases. So mistake number four, similar to number three, when you are emotionally attached, you overestimate the price, or you can also underestimate the price. And often we see overvaluation or undervaluation when the professionals running the process or the valuation have no experience or very poor experience, the methodology used is incorrect, or people decide the business value based on hearsays, what they heard other people saying. And again, we are increasing the risk of having a business that will never sell. Or when it does sell, it will be able to sell at a significantly inferior results than what the owner had in mind. Mistake number five, neglecting tax implication. You gotta understand the deal structure. What you list the business for or what the offer is not what you get at the end. And part of that is exactly because you have to pay taxes to the government. But if you begin the journey early on, you can actually decide how much you can give to the government based on proper planning around taxes. If you don't plan for this sale, if an unplanned sale forces you to exit, or you became sick and you didn't even have a plan, or you have to move, you have to split up, there's a divorce, there is, you name it, right? And then you have to sell and you didn't plan for a sale, the tax bill can take up to 40-50% of your net proceeds. So you really have to pay attention to things like this. It's very important. If you are ignoring the federal income tax, the state income tax for those of us who live in states with income tax, or even local taxes, right, at the county level, city levels, my friend, you are doing yourself a big disservice. Mistake number six, poor timing. If you are not planning for your exit, it's very unlikely that you will be positioned to exit in the right time, and that can create problems because industries goes to cycles, businesses go to cycles, economies go to cycles. If you do not plan, you can be caught up and trying to sell in a time that is not favorable for your business. And therefore, you have less results for your company. So, my friends, we are dealing with some really serious issues here, right? We're dealing with some very serious issues here, and it's very important as a business owner that you are taking these you are taking this information seriously. Okay. And mistake number 7 tells us about the lack of seeking professional advice, and professional advice needs to come early in the process. You shouldn't be looking for someone to sell your business or advising you to prepare your business for sale 3 months before you sell. We actually had a call about a month ago. Somebody called, "Hey, I'm looking to sell." Sure, great. Okay, how much time you have for sale? In 1 to 3 months. That's impossible. We cannot guarantee this kind of outcome. Okay, and of course they can try find somebody else. Okay, what we do, we prepare the business, right? And by the way, just to give you a timeline, often to have a successful exit, you need to prepare your company 3 to 5 years before you decide to sell it. And when you list the company, it may take between 12 to 24 months to get a business sold. Once you sell it, you may be asked to stay around for another 1 to 2 years to help transition the company. So, give or take, we're looking at about 10 years to have a great exit. So, try not to be like one of these business owners who have made this mistake of not seeking professional advice. Be careful with do it yourself valuation software. Be careful with unlicensed professionals. Be careful with advisors who may be willing to charge you pennies but will cost you thousands, if not millions of dollars because of poor advice. So, for your own sake, for the sake of your family, of the people who've helped you build the company, you gotta begin early. You gotta begin the process early. You got to begin the process early, my friends. And you need to understand the process. 3 critical steps, and we're gonna wrap up this conversation. Number one, you need to begin the process early. Again, this is redundant by design and in purpose. You need to prepare early the process. You cannot wait until a life-changing situation happens. You have to go through surgery before begin to look for help. No, 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 no. Number two, assemble the right team right away. You need to have an accountant, an M&A advisor, a tax professional, an attorney, to say the least, to begin preparing your company for a foreseeable exit. And you need to take the action today and right away. Today and right away. And this is where we're going to pause. Okay. Next week, we're going to talk about how to attract serious buyers and how to maximize the value of your business. I'm going to talk about some of the elements you need to start getting right in your business if you want to sell a business, if you want to increase the likelihood of getting your business sold and sold under the terms you'd like to get, the price that is favorable to you, and the timeline that you would find it workable. And if you need help, if you're a business owner, you heard this message, you follow this presentation, and you're like, I could use some help, here's our contact information. My email address is right there, lcpaulo@yetuadvisory.com, or you can send us a message or call us at 773-937-1264. Again, it's an immense pleasure to be here with you. I always have fun preparing these conversations, this kind of interaction, because at the end of the day, I want you to succeed. I want your net worth protected. I want your family to do well. So, again, thank you for spending your time with us. If you haven't followed us yet, if you're not following our social media pages yet, do click the like our page, follow. You know, and please, if there is anything we can do to help, we're here to service you, to help you, and God bless you. Have a